Hey everyone, let's talk about payments, the history of payments. It's always important to talk about again, learn how payments evolved, especially with the advent of crypto recently. Also AI with how AI is most likely going, and fingerprints and all the exciting technologies coming in through payments. We'll talk about how payments evolved. We'll also talk about frontiers and new developments we're seeing on the payment front. So let's start. I think again, in terms if you don't know, right? Let's talk about how payments evolved, right? So initially, I think payments started from again years ago by simple trade by barter, right? Still happens today, right? So if you want, if you wanted, I don't know, if you're a farmer for some reason and you only have X amount of crops, you can go to a hunter who had X amount of animals, and then you exchange. Okay, so that's trade by barter. So trade by barter used to be a negotiation between who wants something people who need something. Okay, and it still exists today. So today we still have the whole topic of demand and supply. Okay, so demand and supply works the same way. People need to have something. People need to try and buy it, and the lot of people trying to buy it drives up the price. The same thing with stock markets today. The same thing. Okay, so that's important to know that trade by barter has always been there today. Okay, and I work in banking all my life. I've been in banks for the last 20 years. And for those who don't know, and I have my own fintech, which I will get into on payment rates. But it's good to know as well that we say that it's been in the market for a while, so that goes into crypto today and all the demands around it, right? So I'll get into that in a minute. The trade by barter has always been there, and it remains a backbone to how people deal with today, how the stock market runs today. So the more people that want things, the more increase you see in that price. Trade by barter happened, and obviously you see the inconvenience there, right? Because that would mean that if you wanted to buy a cow, you have to look for one person who has a cow in the whole village to transact with. That was impossible, okay? So then what happened then? They had to come into cowries and how to make some sort of payment of value into something. And that's how we got into gold as a standard, okay? Again, I'm compressing years of evolution here, right? But it went from trade by barter essentially into something of store value. And I think the most significant over the few years has been gold. Gold came out and then suddenly it became a standard because of one, how precious the metal was and how scarce it was, which is, I think, you can see the similarities between cash today, crypto today, and gold. Okay, but it was tough to mine, and it was mine still used in the world today, by the way. So it was tough to mine, and again, it was much precious, and people actually appreciated the value as a gold. So that became value standard and people traded against. So if you didn't have, for some reason, you didn't have anything of value to give to that person who you want to buy a cow from, you could give them gold, samples of gold, and then that became a standard. And so with time, I think obviously you can see how crazy this is then in terms of carrying the amount of gold you need. Because what if for some reason you've got a bar of gold? How are you going to split that bar of gold into what the user would want? And that's where convenience started to come in. That's where again the multiplicity of being able to split the atoms or split the gold into really small particles wasn't practical, wasn't convenient. Then we got into cash. Again, I'm minimizing a lot of history here, but in terms of the pivotal moments, I think was also when cash came to be. Now, cash, I think, was basically a representation of the gold. I don't want to go into the politics of what happened there, but you guys in the US know what you did. So again, so the idea was that listen, you've got all this gold cash and pile. Okay, there's no point carrying this gold around to go and trade. There was risk. Number two, it wasn't convenient enough. And so what they had to do then was try and get some sort of representation of value of cash. And cash came into being there. And then cash was always a representation to say at some point you can exchange that cash for gold. And that was the value of that cash. Again, I don't want to get into when we moved away from the gold standard, but let's say at some point someone decided that hey, cash is just going to be cash. It's not going to be linked to gold anymore. And then other countries followed through because it was easy enough. One country can do it, everyone do that. So again, you can leave your comments here in terms of who you think was at fault there. But I'll just say, again, governments are quick to cover and copy other governments as well, so that it was easy to just move around and just say, hey, we don't want to show the gold anymore. We don't need to show gold. Let's just go cash. And obviously, if I bring out cash now and hold it, it has more value than gold because at some point, again, it's a lot easier to split and share that cash around if you need to. So again, but you can see, with time, I think specifically around when, let's say, I think it was in 1940s, turns out like, listen, you can't be carrying cash around. So one person, I think, I've forgotten his name, who someone should remind me down here, who invented the cards. Visa card was actually the first, believe it or not. And the idea then was that, hey, you know, we're going to use a card which will be a representation of the amount of cash you have in the bank. That's a convenience again. So you see, all through life, we always want convenience. Humans love convenience. We would rather, again, I thought, who wants to carry gold around? It's not convenient. It's not security. Security wise, it's not good. So move into cash. But cash, you don't want to carry cash around. Okay, cash again. A lot of people argue cash is king, but so also would if you get robbed, right? Then it's gone. You don't put it under your bed. It's gone. So while it's good to carry cash, but it became even more convenient to hold cards. And because a card then would be, if you hold this card, again, you've got a card here. This could be, holding behind this could be a million that you don't know. It could be $5, it could be $10, you don't know. So that was the convenience of having cash, right? Having a card. So the card came in and became a representation of cash, and then it became a standard that everyone moved to because of the convenience. And then following suit immediately from cash became a tokenization. And that's key. So tokenization became, I think again, this move came more from Apple and Android. So Apple and Android became that, hey, that this card, which is just in a physical plastic form, it can also be tokenized so that you have a unique set of code that you can call the bank and the bank will give you this card. You see what I mean? So what that does then, that means that you don't have to carry this cash around, but it can live on your phone. And that's where you have your Apple Pay and Android Pay. So effectively, Android and Apple Pay are just a representation of your card. Even though the drawing is there, it's just numbers. Okay, and the numbers is not this number that you have on your card. It's actually a tokenized account that is called into the same database servers. So the Apple and Android servers store this number, and when it's needed, when it's tapped on your phone or tapped on the device, it calls Mastercard and Visa card and say, "Hey, here's a token of this user. And we please get the card information here and see if this person has enough money that it's trying to get." Obviously, charge some money on that, just a small amount as well. So that's the evolution of how it came into Apple Pay. Again, what's the convenience there? So you can walk around with a card or a wallet, or you can have your phone. You're always on your phone. If you're on your phone, then you don't need to actually walk around with your card anymore. So what happens then? You have a lot of people then using Apple Pay and Google Pay. And recently, I think that came up to about, again, in terms of the jump, especially with COVID, came up to about 60% of all transactions using Apple Pay and Android Pay cumulative, which is a lot, especially in this day and age, right? So following on from that, the question now becomes what's next because that's still new. So I think again, what's new now that became okay from your phone. The next thing you have is your watch. Okay, that's where Apple Watch came in. So Apple Watch is easier because again, you've got your phone, but for some reason, if you're running, you don't want to carry your phone around. What do? You have your watch, and your watch, especially if it has a network and cellular connection, you don't really need your phone anymore. So what used to happen then, still happens, is that a lot of people now just use their watch to make payments. Again, it's easier because you've now moved from you've moved from cash, so from gold to cash, then from cash to a card or wallet, then from that wallet to your phone, and then from the phone to a watch. So you see where we're going here, right? Humans, right? You can always tell where we're going. So one, the convenience of not having to reach out for your phone, and a lot of people now pay with their watch. And then this year, I'd say 2023, the first, I attribute this to Aura, Galaxy Ring, and quite a lot of ring providers. So they came up with the idea of, wait a minute, if you've got this here, then why don't you even get it closer? Because we're more natural. So I'm talking with my hands here. We love our fingers a lot, right? And obviously, gold rings have been since the 1920s, right? Rings have always been, again, watch a video. I have a video on that one. So rings have always been there. Humans, we love rings. We love ornaments in our fingers. So Aura came up, and most of these health rings came up where you can actually now track. Again, this is our ring, by the way, Orukka. So with this, you can track your fitness, your health, your wealth, and everything on there, right? Health is wealth. So you can track your health here, your steps, your sleep, your blood level on this. Okay, we have the extra screen as well, obviously. Aura don't. So or Galaxy don't. So we do. So what that means then is you can now track all this, okay, and that became, I think, became really famous around 2023. It's been growing phenomenally since then. But what we've now done, I think, on Orukka, and a few competitors are doing that now, is actually now put your payment on a ring. So if you look at that, you've got your phone, you've got your watch, Wait a minute, what if you don't want to carry your watch around? What if you don't want to charge your watch every time? What if you're going to, I don't know, like you're going for a run for 3 hours and your battery dies on your watch? To the ring. So the ring now is actually the future, in my opinion, because number one, we love rings, right? We well again, I'm a ring fanatic. I love ring. I grew up watching Lord of the Rings, Goodfellas, any movie at all. Even Thanos. Thanos had a lovely ring that he flips. So we love rings, right? It's innate in us, right? So when this came up, I was like, yes, I'm gonna do this. I left banking to do this, right? And but what this does then, this obviously is a MasterCard in between, and then it allows you to make payment. There is no charge on these, so you don't have to charge them, because it's a passive device. And I'll talk about passive devices on another video. It's a whole video on its own. But this is passive in the sense that it carries no charge. It only makes sense when you tap to pay. If you don't tap to pay, you don't need to charge it. And even when you tap to pay, remember what I said about Apple Pay? It's only a token. It's a number that it gets, not your ring information, not your card information, nothing about you, just the number is what goes through. So that's important because wait a minute, if you only have your number, that's all that's needed to make payment. You could just wear this around and then you tap, they get the number, they look at how much you have in your account or how much you have with Orukka, and then based on that, you make your payment. So that's convenience. That's the next level in convenience now, which I think again is grown phenomenally since we started in Jan. I think we started in January. We tried to raise money, it didn't really work out, and because again, I'll talk about that in a separate video. But it just wasn't worth it, and I decided just to do this myself. So we did this, and then it's been growing slowly. But we're happy with the community we have. So that's it. So again, the future, I think, as we see it, is obviously payment on our hands. There's a future ahead of us already, which we're looking at on Uruka, and that's basically using your thumbprint or Face ID to make payments. Because that's the next level. Because now suddenly you don't have to hold stuff in your hand; you can just go and make payments. And I have some reservations around that. No one should tell my team that, and because again, for me, I like dissociating payments from the person. And so right now, if you see here, this ring exists on its own, even though it's a number is linked to me. But if I chose to, I could decide not to use this ring again and throw it in the bin. I won't. But if I did that, then it's gone. I don't need to. But if you make payments with your thumb, fingers, or your face, then you can't dissociate from it. So I think it carries some risk in terms of one, there's also the security risk, obviously, but there's also, again, you don't know what people are doing with data. So I'm cautious about that, although it's the future. China is really leading on that a lot. There are a few stores as well, closed loop stores. I have a video on closed loop, by the way. So there's some closed loop stores that are trying that now, which seems to work, especially with the Face ID. So you can now make payments with Face ID. It works similar to this as well, in the sense that when you put your ID, your face in there, what it does then, it reads your face, connects it to our token, and that token then is what represents your bank. So your bank looks at that token and tells you, okay, this person has the money and we're going to deduct it from his account. That's it. So it's not as complex as people make it look like it's the future, it's the end of the world. It's just a representation. It's the same technology behind this. There's also behind your Apple Pay. In fact, your Apple Pay and Google Pay were the lead, I think they were the trailblazers in this, in the sense that they helped push the whole topic of tokenization. And that helped a lot. I think I've tried to avoid crypto as much as possible in this conversation, but that helped a lot with crypto. And I don't, if you notice, I didn't mention crypto in this race because uh, crypto, I think, is more, I'll compare that to gold in the sense that it's not a payment mechanism yet. It's still trying to be, and when it does, I think it will take over a lot of this and it will be a strong moment in our journey. But at the moment, it's still not used as a payment mechanism because of the volatility. It's just too expensive. You don't know how many, if you go to a store right now, you don't know how much Bitcoin you have, if you can still afford to buy that bread or that pizza. Or you can just buy a house now just on that same Bitcoin. So it's too volatile to be a currency. That's why it's not part of this as a payment mechanism. But there's some moves around, getting some sort of, central bank currencies and using some sort of stable coin, which is good. But I equate, again, I repeat, I equate them to, again, this is my opinion. We can argue this. I can have a whole conversation on this with anyone who wants to. But the way I say it is, and, Warren Buffett says this as well, it's that, crypto and gold don't provide value in their own rights, right? So what would happen then is you have your gold and you hope that the next person, or you appreciates in value. It doesn't pay you dividend, it doesn't produce anything. Might be used for a few, like I don't know, for computer ornaments for anything. But in truth, gold goes up in value. You don't buy gold to produce something. Let's be honest, right? 90% of people who buy gold are not buying it because they want to use gold for anything. They hope it goes up in value. That's the same thing with crypto, in my opinion. And crypto also goes up in value, and that's why people buy it. They buy it so it goes up in value. They don't buy it because they want to spend it. Um, there is some utility around the stable coin because stable coins is open 247. You can use it as a transaction value where, okay, if you want some USDT, USDC, you can use it. But I think in terms of being a form of payment, we're still not there yet. And hopefully it can. And my advice would be to, if there's anyone watching this on the crypto side, would be to learn from what Amex did. So Amex, what they did was they've got their own closed loop system where they gave out POS machines to everyone across America and a few outside America. And what that does then, if you go with an Amex card, you can make payments with an Amex machine and you've transacted. And then they're good to actually reconcile that. And that I think will make crypto payment device or payment currency basically, if they can create a closed loop system, create some specialized POS. I think they need to depart from much of what MasterCard or Visa are doing. They shouldn't try and collaborate with them because MasterCard and Visa, again, are already on the fiat world. They're on the fiat payment rails. They're already doing well there, and they should stay that way. To me, I think if you try and go into the traditional finance route, it's going to fail, especially in terms of latency, in terms of these guys. Again, you go to make payments, it's zero point 0.1 second, you're there, you're done. 2 seconds max, right? But you can't do that with crypto where there's a lot of distributed ledgers in place and everything has to be set. So that's a long, I think I've gone into a lot of topic there in terms of crypto, but that's a topic that we always, it's always a volatile topic to talk about. And it's hard to just pinpoint now. But just to summarize again, payment is evolving. Okay, payment is evolving based on one thing only: convenience. Okay, we all want convenience. We don't want to carry cash around. That's why we have our wallets. We don't want to have our wallets and cards. That's why we have our phones. We don't want to have phones. That's why we have. We don't have want to have watches. That's why we have these payment rings in place. So join the community if you haven't already. Order your payment ring. I'm a fan. You can talk to me directly. If you have any questions, let me know in the comments or come through the app. I'm always on the app, by the way. I'm always talking to customers. So let me know. Have a nice evening and I'll talk to you later. Bye.